Something every investor should be doing once a year is to go through and say, okay, how much equity would I make if I sold this property? After selling costs, after commissions, after repairs that you might have to do to get the property sold, okay? So you're not doing a return on investment analysis anymore on your initial investment. You want to do a return on equity analysis. Well, how much money would you get back, and if you reinvested that in the strategies that you know how to do, how much money would you be making? And could you basically go reposition your current cash flow stream into a higher cash flow stream? This is what, you go buy 5 single family homes, right? You go wait 10 years, you've been paying down that loan over 10 years, you've slowly been increasing the rents over 10 years, making your repairs as you go, and then at the end of that 10-year period, you're going, wow, I got all this equity built up, the property's slowly gone up over time, the rents have gone up over time, I got a great cash flow stream coming in, but that's a great cash flow stream on your initial down payment. And so if you're like, okay, I got this $100,000 property that I made right now, 10 years it's worth 150, and my loan is paid down from 80,000 down to 50,000 or something along those lines. So now it's worth 150 after sales costs, call it, and closing costs and commissions, including some repairs usually. And, whenever you sell a house, you have an inspection that gets done. You might have to spend $2 to $5 grand or more depending on what is negotiated. And so say you net 140 or 135 or something like that on your sales price, and then your loan is at 50 now. And so you bought the property for 100, put 20% down, and got a bank loan for 80, and then over 10 years, it's just giving you an example, it's paid down to 50, and your sales price net would be 135. So you're saying, look, I'm making $1,000 a month or 12 grand a year on this property or something like that, or 500 bucks a month, depending on whatever it is, and you're doing your return on investment on your 20% down, it's getting better and better. You're like, sweet, I'm making 25, 30% now on my money over that long-term period of time. But your return on equity might only be 5 or 6%. And so if you were to reposition into something else that makes you 10 or more percent on your money, how much more cash flow is that? How much work is it? And can you find another asset at that time to be able to go reinvest into, So you have some challenges with this strategy, right?